Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is accounting for sales return and allowance. If you are looking for a video about accounting for sales, we have it, and the link is in our video description. Okay? So today, sales return and allowance. So first of all, what is the difference between sales return and sales allowance? Sales return is a credit allowed to a customer for the sales price of returned merchandise, resulting in a decrease in the accounts receivable of the merchandising business. We sell something and the customer return it. We will not charge them, so it will decrease our accounts receivable. What is a sale allowance? Credit allowed to a customer for part of the sales price of merchandise that is not returning, resulting in a decrease in the accounts receivable of the merchandising business. I sell something, the client wants to return it, and then I tell them, wow, what if I give you 20% of discount? Could you keep the product? They say yes, so it is a sale allowance. We will decrease our accounts receivable, but we will not receive the product back. And a form prepared by the vendor showing the amount deducted for returns and allowance is called a credit memorandum that look like this one. Our company's data, our customer data, date, and then the number of our memorandum, the number of our customer ID, and here what we got in return or allowance. So if we are not charging them, we are not purchasing the sales back, the sales tax as well. Pay attention. And by the way, let's see how it works in our journals. Let's go to our Excel file. Remember guys, all our Excel files are free and the link to download it is in our video description. And by the way, so subscribe to our channel if you are enjoying the videos. You will be the first one to know when a new video arrives. So here, April 4th, we sold merchandise on account to Lake Automotive, $764.25 plus sales tax, and total $812. So let's do it here. So we are sending them accounts receivable, document number, invoice 498, debit 812 because we are collecting all the money, the sales plus sales tax, credit, sales revenue, 764, and here 812. And we are crediting sales tax payable 47. Why it is not sales tax expense? It is not our tax. It's the customer tax. We are only collect them and we will pay to the state. We are the bridge connecting customers and state. So that's why it is a sales tax payable. So we are collecting the money, we will pay the state later. What else do we have? We have here our sales journal. So our sales journal, how do we do that? Lake Automotive, our customer, the invoice 498, accounts receivable, sales credit. Sales credit is the sales revenue, sales tax payable 47. And the customer 130, not 160. And this is the customer journal, the sales and the debit. And accounts receivable here, our sales. But this is not the most important topic. The most important topic is the following one. Transaction 2, 12 days later. we receive some goods back. So some returning. 65.85, sales tax 395, total 69.80. So what do we do here? And then based on credit memorandum number 14. We basically do the opposite, but we don't debit sales tax. We debit sales returns and allowance. So we debit sales return and allowance. And by the way, it is not an expense technically. We are reducing our sales. So when we start our income statement with net sales, it is sales revenue less sales return. What is another debit? Sales tax payable. We will not be paying $3.95 because if we are receiving it back, we are canceling the sales, so we are canceling the sales tax. And we will credit accounts receivable. We will not charge them in 69. So what do we do? On sales journal, that depends on the company, depends on the textbook. Most of the textbook, they will bring like this one. Some textbook, and I will be putting it on gray. So this gray here, not found on some textbooks. Okay? It is not found. Better. How do we do here? April 16th, the same Lake Automotive, credit memorandum 14, accounts receivable negative numbers. We are reducing our accounts receivable, reducing our sales, and reducing our sales tax. Some textbook brings this, some textbook doesn't. And then, for our customer here, we have a return and allowance. The same credit memorandum, now a credit 69. Why 69? It is the credit on accounts receivable here. And accounts receivable, Lakes Automotive, we are crediting the same number as a return. And then here we have our balances, balance on debit, and so on. Okay, guys, so pay attention on these returns, especially on we also get the sales tax returned. So pay attention. It is not so easy, I know. Watch this video how many times you want. And if you still have questions, just email me, jscarpin@gmail.com, or leave it here. Okay, guys, have a very nice day, and God bless you.